You may not realize it yet, but today might be a true day of celebration. Today might be, when you look back, the day that we reached the peak of these high interest rates that we have been struggling with, because it might also be the peak of the inflation that we've been running up against. We might actually start to see reports showing inflation going down on a year over year basis. And this is what I'm talking about. We've had a really big win today. So if you take a look at the PCE that came out today, it shows that the inflation gauge for the Feds rose 0.5% in September. Okay, this is the core personal consumption expenditures price index in September increased 0.5% from the previous month and 5.1% from a year ago. So again, go back and look at some of the videos that I've done that are a little bit longer. There's one that says when are home loan interest rates going to come down, and it will show the charting, and it will explain that these numbers come out and they mean something. So this 0.5 is higher than September of 2021, and that's why they're saying inflation rose. But it rose at the amount that was anticipated. So the markets already had considered this and kind of baked it into the pricing. We had talked about that this week. Home loan interest rates have been improving, but we were starting to have a little bit of room for banks to hedge their bets a little bit. Okay, so now that this report came out, and it was basically what the markets expected, from here on out, we seem to feel like this, like if it's a roller coaster, we went up, and this is this month right here in inflation. And now we're going to start to see it come back down, because the numbers that we're going to be replacing going forward are a little bit elevated. So it's going to be easier for us to show inflation improving and year over year inflation to be reducing on both the personal consumption expenditure and the CPI. So both of these reports going forward should improve. So let's take a look and see how the markets are seeing things. As we open that up here, now here we go. So here's our mortgage-backed security, down 36 basis points. We were at one point down over 50, but right now we're down 36 basis points. Why would that be, and why am I happy today if we're down 36 basis points? Because take a look at the charting. Look where we are. We are right up against a ceiling of resistance, which is the 25-day moving average. You see, we broke above it, we pulled back a little bit lower, and now we're sitting right here. So this is the first day. This is the day that this report was released, which means that there's going to be kind of knee-jerk reactions, and it takes time for the markets to read through and kind of soak up this data before it makes a decision on where to go from here. So if you don't know where to go, what do? You park somewhere that is safe, all right? And this ceiling of resistance is a safe spot where they're just not sure whether they want to go up or whether they want to go down from here. The 10-year Treasury is the same. So take a look at how we watch this regularly, and we're sitting at 4.00 on a day when the consumer price, when personal consumption expenditure came out and inflation rose. We basically have barely had any movement, and we're sitting on these ceilings and floors. Okay, so it goes to show that in both the 10-year market and the mortgage-backed security market on this 5.5% coupon, basically the investors are parked in a safe place waiting to see which way to go from here. And what is it that is going to dictate that? Well, first of all, they're going to digest this information over the weekend. Second, keep in mind that the Federal Reserve is making their next announcement and change to the federal funds rate on November the 2nd, which I believe is this coming Wednesday. So this is another one of these days where you're going to hear people talking about that the Federal Reserve increased interest rates. Well, they're going to increase the federal funds rate, and by all expectations, they're going to increase it by another 0.75%. However, this is another thing that we're getting to the top of the roller coaster, because basically the consensus now is that in December, the Fed will increase the federal funds rate by 0.5%, not 0.75%. And after that, they might actually pause and just wait and see what's happening while all these things saturate into the economy and inflation begins to subside. They may actually have the wisdom to wait for a minute and let it saturate and let it show the effects in the personal consumption expenditures as well as the consumer price index, which are the two main reports that we look at. So how are interest rates doing on a day where we're down 36 basis points? So all week long, again, we've had a pretty good run. Look at this run here with home loan interest rates up, up, up. And remember, when this chart shows up, that means interest rates are going down. Okay, so keep that in mind if you're new here. So let's take a look and see how we're doing on our Brent Bruce daily scenario, which is, again, our very well qualified 30-year fixed conventional 800 FICO score, 25% down single family residence. What do you think? Well, if you expected us to be at 6.99% on this Brent Bruce daily, you are correct. I would have assumed the same. So we were in the 6.875 to 6.99% range this week, started in the sevens, if you recall. But we had a couple of green days. We had a couple of good days that pulled us back down. And here we are at 6.99. So you've got the mortgage-backed security chart sitting on a ceiling. You've got the 10-year treasury sitting on a floor. And you've got the Brent Bruce daily sitting on a ceiling of 7.0. So you see how they're all parked, waiting to see what happens next as they digest the information in the personal consumption expenditure report. I get them confused, the PCE and the CPI, the personal consumption expenditures report, and then making sure that the Fed doesn't do any surprises or come out with any aggressive comments here on the second. Okay, so the second is the next big number. If we get through this number, they do a 0.75% increase to the federal funds rate. Guys, we are in a great position. We are in a great position to get pushed up. Remember, when the Federal Reserve increases the federal funds rate, out of all the months that you've been watching this, what do mortgage-backed securities do? So the Fed funds rate, the Federal Reserve increases the Fed funds rate, and then the media freaks out and everyone says that they're raising interest rates. But we're smarter, and we know that normally the mortgage-backed security rallies. It rallies because it likes the thought of being aggressive against inflation. So if it starts here and it rallies from here, look at all of the things that we get to cross. We get the 25, Fibonacci. This is the 50-day going up against the 100-day. So we can start rallying and breaking through some of these ceilings. And then hopefully here comes our next CPI report showing inflation subsiding. Here comes our next federal funds CPI report is going to come out in November. And then in December, we'll have another Fed funds announcement coming in at 0.5%, showing that inflation is receding. Then we have our personal consumption expenditure report coming out, showing inflation is receding. All these reports should start to show inflation coming down. And that's what we've been talking about for a long time, that we expect as we go into the spring months, especially, that inflation will show that it is subsiding. Home loan interest rates is going to like that very much. And we will begin to see home loan interest rates come down. We will begin to see even the 5s, maybe begin to see the 4s, maybe by summertime. Imagine if we were in the 4s when our summer selling season hit. And all of these people not only have been all this pent up demand of everybody that thought that they would never see interest rates in the 4s again come running out of the woodwork. And by the way, over the next 6 months, these sellers are going to realize if they want to sell their house, they need to bring the prices down. So if they bring their prices down 5 or 10% and also home loan interest rates drop, now you're going to see some super activity happening in the housing market. That is what I'm expecting. Hopefully it all plays out. Let me know your thoughts. Make sure that you like, subscribe, and share. More data is going to be coming out here soon on the YouTube channel as well. Make sure that you like, subscribe, and share. Have a great weekend. And I think that we made it through a very tough time. We may be on the other side of this. Talk to you soon.